live now, everyone. All the best.
Right, good morning, Marhaba, and thank you for joining us on this next session of the 14th Global Energy Outlook Forum. We are talking all things OPEC Plus, looking at what might be in stake in 2024 for the oil exporting group and its friends. Speaking of friends, very pleased to be joined this morning by a few of mine, both old and new. Talking to me this morning, we have the award-winning Amina Bakr, who is the Chief OPEC Correspondent and Deputy Bureau Chief at Energy Intelligence, speaking to us here on this Gulf Intelligence panel. Morning, Amina.
Good morning, Brandy.
Dr. Yusuf Al-Shamari is CEO and Head of Energy Research at CM Markets and Senior Research Fellow at Imperial College London, a man who's very busy at the moment shooting a documentary. Thank you for making the time for us, Dr. Yusuf.
It's absolutely my pleasure, Brandy, and I'm delighted to join you this morning.
And a man who I actually quoted on our show this morning, Paul Hicken, Editor-in-Chief of Petroleum Economist. Hello, Paul.
Hi there, and thanks for that, Brandy.
So Sean has prefaced this discussion, the title of this discussion, with an observation about the fact that those quick COVID OPEC Zoom meetings, which were pretty much done before you could switch on the kettle and make a cup of tea, have been replaced by much lengthier affairs. Before we get into what the year holds for OPEC Plus after a rather dramatic couple of months, let's use those meetings and the changes we've seen to set the scene. And I'm going to ask Amina, who is a veteran of the OPEC stairway squash, to remind us the changes that we saw in COVID and where we are now. Amina.
Yeah, that's right, Brandy. I spent many, many years sitting in that stairwell waiting for the ministers to finish off their meetings. And you and Sean are absolutely right. There has been an evolution of OPEC Plus meetings, and we've seen that over the past years. Really, when COVID hit, the meetings migrated from Vienna and being there in person to having these meetings online and through phone calls. These meetings tend to happen at a kind of a shorter period than we're used to, mainly because the ministers have a lot of communication ahead of the meeting, and these deals are hashed out ahead of the actual meeting. So when we have a meeting that is 10 minutes or 15 minutes, it's not because the meeting was really 10 minutes or 15 minutes. It's because they took a week or 10 days or sometimes even longer to agree the terms. And when they actually start the meeting, it's just a matter of voting on the outcome, which they know already, and announcing it. So there has been a change. I mean, the meetings have been getting a little bit longer, but we're still used to the fact that the ministers, about a week ahead of any OPEC gathering, they do have a lot of alignment, communications. They get everybody on board, especially ahead of any policy changes. There needs to be a lot of negotiations around quotas, baselines, what to do, discussing the economy. So in that sense, I feel communications among the members has improved with the changes that we saw post-COVID.
But not everyone has been happy with what's going on. Let's look at some of the changes in OPEC Plus itself. And let's start with one of the most recent dramatic changes, which is the loss of Angola towards the end of last year, which brings us into the perennial subject of OPEC unity. Paul, I'm going to throw this to you. How big a deal is Angola's leaving? Is OPEC unity under a new threat?
Well, that's a good question, Brandy. And first of all, let's put some context to this. And quotas have always been an issue for OPEC. I mean, adjusting quotas has been an age-old issue since they started in 2016. The whole OPEC Plus and having these agreements. And I think first and foremost, you've had several countries leave OPEC Plus in recent times. It's not unusual. Indonesia, Ecuador, Qatar, for various different geopolitical reasons, they've left. And Angola was a production in decline. It's not going to necessarily materially impact what was going to happen in terms of the overall production agreement, because Angola was struggling to get production up. So in that sense, it's not really a material impact on that level. But at the same time, I think the fact that OPEC and OPEC Plus has come out with this kind of show of unity almost suggests, does the lady protest too much? You know, there's a sense that they needed to come out to say this. It was a bit of a disruption, especially since the last meeting, many of the protection groups went to voluntary cuts. It wasn't a completely unanimous decision in a sense. You didn't have this full everyone on board with the quotas. So you've had that on the backdrop, which you could say is quite normal in another sense, because, you know, a natural evolution. If you've got 22, 23 members of a group, then you're going to have disagreements. You're going to have disruptions and misalignments. So it's harder to get everyone working in the same direction anyway. So, you know, in a sense, yes, it's maybe a bigger deal than sometimes in the past, but at the same time, it's not going to affect the overall plan of OPEC Plus. And I don't think it's while there's a slight wobble, I think it's more of a speed bump than anything bigger than that.
But you've brought up the interesting topic of another evolution we've seen in OPEC recently, which is market management, that small subset of countries being involved in their own cuts rather than a sort of a secretariat-wide announcement. Yusuf, what does that mean for where OPEC is at the moment, the capacity of those producers to cut, and what that says about OPEC unity?
Hi, Brandy, and good morning, everybody. Well, I believe the changes that we have seen in terms of the complexity of meeting and how it has evolved since the time of COVID, there are multiple factors that have contributed to that. During the COVID-19 period, let's say 2020, 2021, perhaps the major issue since announcing the historical agreement in May 2020 was the compensation and so-called under-compliance. So I remember the chair of OPEC Plus, Prince Abdulaziz bin Salman, suggested the approach of compensation, where countries who under or list compliance can compensate within later periods. But then we have seen countries, especially from Africa, who are falling below their quotas, and some other countries who are willing to ramp up their production above certain baselines, especially here the United Arab Emirates and some others. Of course, the war between Russia and Ukraine has also contributed to that complexity in how the negotiations are handled. So then we started to see also the ample supplies emerging from the US, from Guyana, and other non-OPEC suppliers. And we've seen prices coming down below 90 and now even below $80. So I believe that has contributed to how different producers, especially now what you come to your question, the bigger producers, where they would like to see, although officially they don't target any prices, but at the end of the day, prices definitely are indicative of the market status of even the supply and demand balance. So I believe that add to the complexity of these agreements. Given the fact that we have seen countries like Angola leaving, and before Angola, Ecuador also left the organization, although their departure from the group was not a major change to the market dynamics, but it does send kind of a not promising signals in terms of the so-called how the markets react to these about the group dynamics in general. And I believe here that can add some sort of a challenge as we move towards 2024. Just yesterday, the Saudi cabinet, the Council of Ministers, has reaffirmed the importance of the alliance signed in 2016. And I believe Saudi Arabia is trying to send a signal that the unity of the OPEC Plus alliance is quite crucial as we now go through multiple factors this year, which is number one, global economy, where we're expecting central banks to cut interest rates, perhaps sometime this year. We have ample supplies coming from different producers, and prices are perhaps below the level that many producers would like to see. We also see voluntary cuts from various, especially from Saudi Arabia, and many producers would like to revise their baselines. So I believe that could definitely add for complexity into these meetings, and definitely we need to. I think the group will definitely have to come into a sort of formal agreements as we move from now until June, that can pave the way for ever more lasting agreements in the years ahead.
Okay, let's very quickly target two of those possible complexities. I'm going to throw one at Amina for a quick thought. The UAE, which as we know has in recent years pushed out for its baselines to be revised, is targeting increased production itself. It wants to reach 5 million barrels by 2027. If it's being asked to cut more, could that be a sticking point?
That's a good point, Brandy. And some of this misalignment that Dr. Yusuf had mentioned, that some producers aren't able to meet their production capacities while others have more flexibility, that needs to be reflected in the current baseline system, which isn't reflecting reality. OPEC realizes that. I mean, that's why they started the process first with the African countries, reviewing some of those baselines, which led Angola to be very unhappy with the baseline that it was given, and therefore decided to walk out. Just a small point on that, Brandy. Angola hasn't been meeting its baseline for months now, including in the months of December. It hasn't been meeting its baseline. So its demands for an even higher baseline were almost unjustified. And this is a kind of fair process that's being done by consultants. So it's this bargaining will not work within the OPEC group. So in June this year, for the rest of the members, we've already done the assessment for some of the African states. The rest of the members are going to be receiving a revision of or an assessment by these independent consultancies for their baselines, including the UAE. And the UAE, I mean, it's very it's a fair process. So they will find out that the UAE has in fact been growing its capacity. We believe that capacity right now might be in the range of 4.3 million barrels. It might increase as we go ahead into the year. So that naturally would mean that the UAE will receive a higher baseline. And already going into this year, what happened at the last meeting is that the UAE received a revision. So I find the UAE quite satisfied with the process so far, what I've been hearing from officials here and within the OPEC Plus group. They feel that their voice is being heard, and it's going to be reflected in the final numbers that they get.
Okay, well, let's look at Saudi then. Paul, I'll throw this one very quickly to you. Saudi's got a lot of projects to pay for. How much longer is it going to be happy doing a lot of the heavy lifting on the cuts front? When we're talking unity, should we maybe be looking at the relationship between Saudi and Russia at the moment in terms of production and exports?
Well, I think, yeah, the fact is that Saudi Arabia's GDP and oil prices are closely correlated. So you see why there's been a stronger push for Saudi Arabia to have a high price strategy, right? And even will prepare to suck up further cuts and on the behalf of the rest of the group. But you're right, Brandy. At some point, if the economic weakness stays, if demand stays weak, then what limits are going to be put to the test this year if we was to see a further decline in prices, if we're going to see demand staying weak? We saw that how the market read the signals of Saudi cutting its OSPs and what it said about physical demand in the market and the weakness there. I think Russia. That's why, in a sense, some OPEC members are more equal than others. The Russia-Saudi agreement and having Russia, even under sanctions, cut exports is crucial to having the deal done. Iraq, UAE, all hugely important members, not just in terms of volume, in terms of the history of OPEC as well. And in a sense, in one point, it's correct that Angola has not been meeting, that had independent sources verify that. But at the same time, Angola would look to, say, for example, and not picking anyone out in particular, but Libya, and saying, you haven't met yours for years, your production targets either. And I know Libya would have its own justifications for that, given its civil conflict. But at the same time, I think you could, I think Angola leaving was probably a little bit to do with more geopolitical alignments of interest around where it gets investment from, China and the US, etc. But I think Brazil potentially joining, I know it's only observer status, could be could it's a huge producer. It's part of this big non-OPEC supply that Youssef mentioned, along with Guyana, and these are much. We talk about market power in terms of OPEC plus, and OPEC plus has seen its market power slightly decline over the last 5 years. Its market share with the rise of with non-OPEC, and I think having these extra producers, I think Saudi Arabia would be prepared to take a little bit more of the extra burden if it gets the market power and decisions it wants in the market.
Okay, we are going to get back to who is winning the market power game very shortly, but a couple of people have mentioned the economy there, sort of OPEC versus demand, I guess, is what we're talking. We had the World Bank come out this morning with a fairly dismal forecast going into 2024, talking about just under 2.5% global growth and not having a lot of good news for the next 5 years unless things change. They are calling it a wasted opportunity, basically, for the world economy. The $75 floor implied by the OPEC support that we have seen, Dr. Youssef, if demand weakens, how much pressure is that going to be undergoing into 2024? And how much leeway does OPEC actually have at the moment to keep cutting?
Well, that's quite a tricky point, Brandy, because currently we see a voluntary cuts. Like Saudi Arabia production now is nearly 9 million barrels. Russia is also close to that level. And if we're also seeing some countries, Nigeria and some others also are not meeting their production targets. Some countries are ramping up, like who have got to revise the baselines, like UAE in 2024. But the overall production of OPEC as and OPEC plus as in general, perhaps is I would say is not as high as it used to. So they're already cutting, especially with the recent voluntary cuts that they've announced. And one issue here I'm worried about is that because that's something we've seen in 2023, where we've seen some cuts, and that these cuts were not really reflected on prices. That has affected even the economy of Saudi Arabia in 2023, where the growth was less than 1%, according to a statement from the Saudi Minister of Economy. So I believe this is one tricky issue, is that if cuts are going to be made in 2024 to support prices or to support the balances, then all members will have to participate. And this is one firm point that has been made by the Kingdom of Saudi Arabia. So either via voluntary cuts, via forging a new OPEC plus agreements, that perhaps it will not be as deep as what we've seen in 2020, but I believe they have to form not just voluntary cuts, but a new OPEC plus agreement that enable them to support the balances and take into account the ample supplies that we're seeing today, something that we did not see in 2021 and 2022. We all remember when His Royal Highness said, drill baby, drilling is gone forever. But now we're seeing the enhanced efficiency of, especially from the US productions. Definitely we're not seeing increase in drilling rigs, but increased efficiency of production. And that's what I think the group has to take into account.
Let's actually jump into that. Paul, you mentioned earlier OPEC losing market share and maybe a bit of dominance. We've seen those big mergers coming out from the US, ExxonMobil, Chevron as well. Speculation about whether we could see some mega mergers in Europe to follow, shale operators rather joining forces with some of the big players, and shale, as Dr. Youssef mentioned, coming back there with a bit more growth than expected. How much is OPEC a victim of its own success in that by keeping prices higher? And how far could we see that resurgence in the US go?
Yeah, you're right. It is a victim of its own success, in that sense. And I think it's worth talking two things about US shale, which is yes, first of all, we are seeing we have seen it surprised on the upside in 2023, but I think we have to be careful not to assume that it's going to surprise on the upside and have the same record growth 2024. I think I'm still quite circumspect about huge levels of shale boom. I don't think we're in those levels. I think yes, we've had efficiency gains in US shale drilling, and there's certainly been massive improvements. And with the majors owning them again, there seems to be they have a bit more market power, like an ExxonMobil, Pioneer, and Chevron and Hess. They have more market power, but at the same time, it also means, in one sense, they're more impervious or more immune to sort of changes in prices. But at the same time, they're still going to have a bit more financial discipline and fiscal discipline and reward to shareholders. And I think we have to juxtapose that with pre-COVID, when we saw all the independents. And OPEC had another thing to deal with at that point, which was the marginal supplier of shale. It was in many ways, people looked at OPEC providing the floor, which you referred to earlier, Brandy, and shale providing the ceiling. And shale no longer provides a ceiling in that sense. It will come on when prices are higher, but it's not the same challenge for OPEC. That was a huge challenge for OPEC a few years ago, and they had lots of talks and discussions with shale producers themselves to look for a way forward. So I think, yes, it is a changing backdrop with shale, but I think it's probably not as problematic in a sense as the past, when the independents would just produce at any price signal going higher.
Okay, we've got a bit of an interactive poll that's going to pop up on your screens in a moment for those who are watching and listening us. We're asking you to vote on something that we have covered in this session, whether or not we had the change in meetings that Amina mentioned earlier, the change in length, whether that could be due to an erosion in Saudi-Russia oil policy and the alliance there. It's an easy choice, yes or no. Vote and tell us what you think if you submit those now. Amina, I want to throw one question to you before we move into a bit of a very quick crystal ball session about the evolution of the market in terms of who's holding sway on the buying side. Ouch like hell is one of the other big quotes from the last year or so when we're talking about speculation. More smaller speculators maybe rather than sort of bigger buyers, bigger banks being able to sway the market, frustrating OPEC. Where is all that going, in your opinion?
Yeah, that's right, Brandy. Prince Abdulaziz is ouching like hell. I will make speculators ouch like hell has become a very, popular quote that everyone remembers during these times. I agree with you. Yes, the market has changed. The market has evolved. A decade ago, if you had any conflict in the Middle East with the size of the conflict that we're seeing right now, you would have seen oil prices go up to the roof. These days, it's a completely different story. And I think that's just a change that we're seeing in the structure of the market. You're getting more smaller traders, speculators influencing which direction this market takes. And there was even data out recently. I read it in a Bloomberg story saying that positioning towards a more bearish market has been seen in the number of trades in WTI and Brent. So the structure has changed how this market functions, and kind of it makes sense. I mean, we're trying to make sense always of why is the price is it. I mean, the fundamentals aren't really reflected in the prices that we're seeing right now. There are other factors at play, and sentiment has a lot to do with it, but also speculation has a lot to do with it. And this is a big challenge for OPEC. I mean, OPEC's levers are really to do with supply. They can either increase supply or cut supply. There is messaging, of course, that they continue continuously do about the economic state of the global economy and so on. But I feel like their job is very tricky because there are other factors at play and new elements that they've never had to deal before. And that's why they've had to come with these very creative ways of presenting their agreements between collective cuts between the group, and then you have the voluntary cuts on the top. And sometimes these things are not very clear to the market, again, for these smaller traders to understand the complexity of the deal. And that's, again, part of the reason why we're seeing prices where they are.
Right. I've got 5 minutes left before we hand over to the legendary Mr. Frank Kane. I'm not allowed to go over. So you've got about 40 seconds each to speculate wildly, with the caveat of going into 2024. Who would know? Dr. Youssef, first off, where do you think we will go this year? Cuts, price and unity. Super quick.
Cuts, price and unity. Well, in terms of cuts, I believe we're going to see extension of voluntary cuts currently being in place. Concerned or kind of thinking how it will be interesting to see what the group will decide in June later this year in terms of if there will be a new OPEC plus policy, which I think is important. In terms of prices, I think we could see $80 as we move towards the end of Q2, assuming China comes back with a good recovery. And unity, I believe I'm not worried very much about the unity if we end up with an agreement that is kind of takes into account the new capabilities in terms of capacities and in terms of market fundamentals. And if, let's say, the group can come somehow restore the current market status that is satisfying for all our members, I think that will support the unity moving forward.
Right, Paul, 40 seconds, cut prices and playing nicely together.
Yeah, so I think cuts wise, I think prices, first of all, I think we're going to probably see a year of two halves. We talked about it last year, about a year of two halves. This could well be towards $70 a barrel for the first few months of the year, real testing the bottom of OPEC's floor, but jumping higher in towards the second half, potentially even up to $90 a barrel by the end of the year. So I think we see a story of two halves potentially, and OPEC will be really testing that first half. I think that may allow OPEC to free up a little bit of wiggle room in the second half, and it may not be as tested potentially. But I think what would be a potential surprise is a move from production quotas to export quotas. We've seen it with Russia, and I think that could be the surprise and where we're moving to, maybe 2024 or maybe a couple of years later.
Amina, the final word is yours.
On prices, at Energy Intelligence, we're expecting an average of $79 to $80. This is for Brent so far. In terms of unity, yes, there are a lot of challenges ahead. And as I mentioned, that the baseline reviews are going to start in June. But I think that they could overcome this hurdle. And in terms of the cuts, I agree with Dr. Youssef. I expect them to extend the voluntary cuts for at least another 3 months because of so much uncertainty still. But again, if we reach a point where prices start to rise and there's an issue with compliance, they need to come up with a way to gradually bring up production so they will avoid the potential problem of compliance being lax again. So that's another challenge if you do get an uptick in demand.
All right, and I've also just had pop up on my screen the results of that survey. Thank you for everyone who took part. Is the change in the OPEC meeting times due to an erosion in Saudi-Russian oil policy alliance? A rough third say yes it is, which means a rough two-thirds, 68%, say no. They don't think so. Thank you very much to everyone who's joined me today. Amina Becker of Energy Intelligence, Dr. Youssef Al-Shamari of Energy Research and Imperial College London, Paul Hecken of Petroleum Economist. We hand over to Frank Kane for the next session on time, which gets us all brownie points. Thank you for joining me this morning.
Thank you.
Thank you.